Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, daily created, highly anticipated edition of the afternoon swing trading floor with your humble host, Jeremy Alexander, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and most importantly, trade it. Folks from around the world, what's going on? It's your boy and your humble host, Jeremy Alexander Newsome. Simon's in the house. Brad Hauser's here. Charles, my man. Charles the Myth March. Angela, what's going on, girl? Dawn says she's here. My buddy Chief is here. Sharon Baldwin's here. Falconium's in the building. December, Gene, Gary, Masashi, Goran, Nagia, my friend Santosh, Tim Thurman, the whole crew, the squad, the gang, the family. All right. It's Thursday. I don't even know where to begin. Where should I start? Where do I start? I'm almost at a loss of words. Really good day in the markets, kind of, sort of. Good trading day, some opportunities made. I think it's Thursday. The Qs are down hard post-market. Microsoft rolled and a few other stocks are rolling because of Google and Amazon's debacle. Both of those are gapping down. Let's just dive into it and come back to the markets. Let's go look at Google and Tesla and Amazon, because those are the ones that everybody was going to hope was going to lead the market higher. Like, it's going to be, both of them can't miss earnings. Both of them are gapping down, even though their earnings were good. Here's Google. It's down to 1050. Now, obviously, anything is possible to change tomorrow, right? Anything can change tomorrow, but this was a pretty weak bullish day in the market, I felt like. All day I was waiting for a rollover. I got stopped out of Microsoft twice trying to play a rollover. Still made a very small amount of money on the day, and I do mean small. And Google's gapping down right now 4.5% to 1053. Now, is it going to open down there? I don't know, right? This could possibly rally, and we'll just have to see. It probably does double bottom a little bit and eventually come out of here. I think we could open, down some, but we probably do open down on Google. We'll just have to see. Right now, a 1053 gap is going to be gnarly town tomorrow. That would just be trapping everybody. So we'll see. That's really worst case scenarios and open right about where we are now. That's just going to drop like a rock. I don't know if it's going to happen, but we shall see. Here is the long-term moving averages, and you're below them. Here's the weekly, and that's going to be the next target, is the 100 simple weekly. Now, again, is Google over? Is this the top of Google? Does Google never go higher than this? Most likely not. I don't think we hit this target up here at 1453 anymore, at least not by the end of the year. I'll just change that to when we do hit it, it'll be the next target. I'm still all a fan of Google, long-term, great company. They did well. Everything is good, except they're gapping down a little bit. And we'll just have to see what happens on Google and what it does at open tomorrow. And that's really it. Here's the 5-minute chart. In the first 5 minutes, there was a lot of selling right before the open, right before earnings. So yeah, we probably do gap down, and we most likely have a little bit of a bearish day ahead of us on tomorrow. So here's Amazon, and Amazon's getting wrecked. So I'm sorry to laugh. I really did think Amazon was going to gap down on earnings. Gap down to 1639 and continuing down 8.5%. This is going to drag the whole market down. The whole market is going to go down tomorrow. And we'll probably end up with a doji. We might end up with a gap down and a fade. That's certainly plausible. But it's just really fun to see. Andy did say he bought back this bull put spread. Even if you didn't, I think you'd still be fine. I don't think it sells off another 200 points tomorrow. But this is a decently strong gap down on Amazon and Google. A lot of people are trapped, and it'll probably bring the Qs down. So we'll just have to kind of see. The Qs is down to 167.37. Today is pretty much the exact candle that I thought was going to happen. It didn't play out the exact way I wanted to with Microsoft, with that one of the day trades, but it really is the candle. White candle, gapping up, and we have an upper and lower shadow. Just wasn't exactly the way I thought it was going to look. So we're going to just see how these earning gaps affect the market. Here's the SPY, and the SPY's down 1%. Again, all of this is post-market. All of this could change, tomorrow morning. But 267.55 will be a little bit of a bearish gap tomorrow on the SPY. Here's the 15-minute chart. So it really just depends on how it opens. Could we trade all the way down back to 265 and then open and then rally again? Yes. Will that happen? I don't know. I really don't. We'll see. Here's the Dow Jones, and the Dow Jones ETF is down again just a little bit with the miss. Nothing too dramatic, but they're certainly down some. And the IWM, the Russell 2000, is also down about $1 post market. All of this could come back tomorrow. I just don't think it does short term, because as I was mentioning yesterday, I think it'd be prudent to get into some puts today on a pullback or retracement, expecting it to continue lower because we did close below this massive, massive candle. And the weekly chart, to close below the 50 EMA on a weekly is a big deal. And, we got the rotation. I'm thinking kind of not necessarily worst case scenario. I'm not saying the market's going to zero. This is a 4. This could be a 5. This is an A, B, C wave where we realistically do trade back down to about the mid 250s. Just makes sense to me. I'm not saying it's going to happen, but if it does long term, I think it's a great place to buy. Some people will freak out, and we might take a little bit of a dip, below it, something like this over here. And we could chop around. We could keep chopping around for a while. It seems like forever, but it really hasn't been. Mostly, if you start talking about how choppy this was, you're really looking at a span that lasted from what I would say September 14 to, let's say, November 16, 2 full years of chop. And right now, we've only been going down less than a year. So could we continually get a sell-off down to here, a bounce, a trade down to here, a bounce, some chop? Absolutely. It's going to be good for option sellers. We're taking advantage of volatility if you do it at the right time. It's going to be really fun for day traders, and swing traders will still continue to just kind of get all kinds of stuff happening. And, it's interesting. Jaya says, it's hard to buy a put today because you don't know how Amazon and Google earnings are going to go. Market could go either way. Absolutely. And I mentioned in Slack, Sylvan was asking a question today about what to look for. And this was, he said, I'm trying to pick the right time to buy SPY puts and SPX calls. I was mentioning it could be a good time to do both and go for a strangle, right? Buy SPY calls and SPY puts. Just in case. Straddle strangles are always good ways to approach the market at kind of a volatile time like this. Yeah, a lot's going to happen, and we will see. Julian says, don't we have to wait for a close on the weekly to be more sure? We're going to close below the 50 EMA on a weekly tomorrow. I would assume that would be a monstrous, another 3% down up day tomorrow. 5 points. It'd be a huge day if we rally from 267 up to 272 tomorrow. Certainly possible, but it does look like we're going to close below the 50 on the weekly. And if we do close below the 50 on the weekly, it's going to be my thought that we could certainly retest a little bit more. But I think that there's a little bit more pain out there. And that was the message yesterday with a close below what I thought was the bounce candle. That was it. So since it didn't, going to get a little bit of a retest, and woo, it's going to be a ride. I'm pumped to see what happens. I have no idea. Let's just trade the candles as they go. They're going to be tough. It's going to be very difficult to swing trade. If you're trading futures, congratulations, because there's going to be a lot of futures momentum to trade. If you sell options and you do it at the right time, and you should be, most of us should be somewhat protected with our option sales. If you're doing it in the right locations and whatnot, you should be okay. Tesla was a gap up today, and it's also gapping down with the news. Everything's gapping down with the news. Everyone thought that they were going to go up on earnings. So Tesla gapping down a little bit, 2.8%. Again, that's post-market. Things could get different. We will see, of course. But on Tesla, I really loved this bullish gap up, and I like it. I mean, it's a good gap. It was a nice opportunity for a bullish day trade if you got a chance to catch the right move. I didn't. I watched it a little bit this morning and just didn't really see a great entry. I could have played this double bottom down here on the 3-minute, but had a phone call at 10, so I kind of missed that little move right there on Tesla. But alas, it was a decent gap, and the reason I'm bringing it up is because a lot of traders do have put sales on Tesla. So we're going to look at that again tomorrow, but my buddy Brad has a put sale. Bob bought back these 115 put sales, and I believe sold some 140, 175, which is still very far away. My buddy Scott, I sold some 175s for January. By no means not saying we can't get down there, but again, that is a whole $100 and then some move. 100, let's call it 130 points. Huge move for Tesla to get down there, especially after good earnings, posting a profit, and people are kind of excited. So the volatility should start slowly calming down on Tesla for the most part. If you did some more bull put spreads over earnings or put sales, well done. And here's the weekly chart. And the weekly, you're getting a little bit of a bounce. And that's pretty much it. So we're kind of hanging out. We're doing our thing. It's bouncing around, chopping around, not a whole heap of stuff going down on Tesla. And then my thought, here's going to be my note. If Tesla closes below the low of today in the next 2 to 3 days, Tesla most likely will pull a Netflix. I'll put that in quotes. And let me just make a time marker of today. What day is this? Today is 10/25/18. Now, what do I mean by pull a Netflix? Let's go look at Netflix. Again, I'll probably be popping all over the place today, so don't mind me. Just strap in. It's going to be a fun day. Netflix. So NFLX weak with a close below that bullish candle yesterday. Jeez Louise and a set of trees. Really weak with a close below that ginormous bullish candle. And today, for most of the day, the whole day, I just felt like it was a retest. The whole day, I was like, man, I feel like this is a retest. And Jai says, I closed the Netflix today and wait for 250, my man. Okay. Smart. I think it's going to get there. I don't know when. My buddy George got into a 255, 380 short strangle. So you've seen that note before on the chart. That's a 380 and 255, November 9. So if you're selling volatility these days, most of you are probably selling it pretty short term. And here's the weekly 50 EMA on Netflix, right? It's at the 50 EMA, so it hasn't closed below that, but you are getting that double top look. And if we do close below 309 tomorrow, I can almost guarantee you that Netflix will hit 250 sooner rather than later. So just it doesn't mean that you have to sell all of your shares or get out of, just buy some protection. That's all. Just have a little bit of protection, or if you're selling options like George is, just do it kind of neutrally. What was I about to write? I forget. Oh, yes. Okay. If Netflix closes below 309 tomorrow, more bearish than bullish for a while. 309. Simon always got my back. Ugh, at Times New Roman. I did not mean to do that. What was I on? I was on Veranda. Was I on Veranda? Nope, I wasn't on Veranda either. Carrier New. Shoot, I don't know what font I have. Anyway, oh well. So I have a few notes on the board. This is again, I don't think the market's going to go just get absolutely train wrecked tomorrow. It could easily recover. But it's going to go a little bit lower. There's going to be some support right here. And we're either going to have one of the most bullish days we've had of the year tomorrow or one of the most bearish. And I would laugh, actually, if we just have a perfect doji tomorrow. That's also probably 30% going to happen. But tomorrow could get fun. I'm going to have to take some sleeping pills tonight. It's going to have to happen. We'll see how we open. Again, I'm not saying it's the end of the world, but we all know how to make money on a down market. Yeah. So Netflix, if it hits 300 tomorrow, I will laugh because I was a week off on my bet. When I mentioned pull to Netflix on Tesla, this is what I meant, by the way. So you'll notice that Tesla gapped up and it gapped up and bounced off the 100 simple. So Tesla did the same thing. Now Netflix was much more of a retest gap than Tesla was. Right, Tesla was a little bit more of a gap and go. So that's what I'm just saying is if it does gap up and we do close below it, especially tomorrow, we probably do this on Tesla. So we'll sell off and we go back down to a low, and then who knows? I have no idea. Anyway, that's Netflix. What else is next on the list? Car Gurus. So CARG, Car Gurus holding up decently well. This is one that has filled this gap right here and filled the gap. We did play that little bullish move. It's in between the 100 and 200 simple. Brian Montgomery has a put sale, and we have a little bit of a trend on Car Gurus that most likely will just hang out for a little while. Something like this. So there is a trend on Car Gurus, and here is the support resistance here at 383, 3843, which is pretty much right where the 200 is. And I think for the most part, since we had such a drastic sell-off, Car Gurus probably will just chop around in here for a bit. And then on earnings, it's either going to gap up or gap down decently well. And then we'll just be able to extrapolate more data from there. But I don't have a trade that I really like on Car Gurus right now to get into. Next on the list, believe it or not, is good old Blue Apron, which was up 4.5% today, which is a lot because it's at $1.16. I had a friend of mine ask me if I should put $1,000 into Blue Apron, and I was thinking to myself, only if you buy Blue Apron and you use the service and you like it. I still haven't used the service, and I still haven't put in $1,000 on Blue Apron just as an absolute zero. Earnings is around the corner. I guess we're just going to wait until earnings. I mean, is it going to gap down on earnings and keep going lower? Why not? Sure. Fundamentally, it's a little bit of a weak company. I'm just having a blast looking at some of these charts right now. Because I know I've been wrong on Blue Apron. Well, I haven't been wrong. I've just been mentioning that I was like, yeah, at some point you think it's going to bounce because it's a brand new IPO. Just hit the New York Stock Exchange back in 2017, 2 years ago. And it's just been getting It's down 99.8% or whatever of its IPO price. It's just comical. So it's going to keep waiting on Blue Apron, I guess, waiting for something. I don't use the service, so per my rules, you know, I haven't done any extrapolated information. Like I haven't gone and interviewed any CFOs or CEOs or CIOs of Blue Apron. I haven't met anyone on the inside. I haven't talked to anything, so I can't really just absolute zero it until at least I buy the product. So here's what I'm going to do. I'm going to text Ashley. We need to use Blue Apron. Give me a second. Where's my boo? Hey, boo, we need to use that Blue Apron code. I need to get some Blue Apron to see if I can buy some shares. I just feel like it's an easy risk. It's going to zero. It's at $1.16. I don't know. The upside's good, though. Because if you buy 1,000 shares and it goes back up to the IPO level in 2 years, you're going to make $9,000 in cash. I don't know. What do I know? Eventbrite, EB. It's going to keep going down, most likely. It looks like a beautiful pennant pattern, and I know it's holding up closely. I love Eventbrite. Many of you have been using it for the Money Grows on Trees event, and I just want to say again, for those who have, thank you so much for doing that, by the way. The early bird ends on 10/31/18, and the Eventbrite, just very useful, easy, simple program, software, company, website. So with this overall trend and the way it's looking, I think Eventbrite would just keep going down a lot more. And I'm just going to slowly, again, small size at 2076. I'll buy a little bit more down there and just wait to see what that one does. So that's Eventbrite. American Airlines was up today, up 6.6%. And American Airlines on earnings, just so much going on today. Are you guys alive out there? Because over the last 48 hours, there's just been so much. Oh, man, it's been fun. I love trading. I love the market. There's nothing like the markets. There's nothing like the stock market. Can you imagine if your house fluctuated 25% in value in weeks? Oh my, there will be no such thing as a real estate market. It's amazing. And volatility is cool, especially if you're an active trader. There's a lot of you making some serious money right now. Serious money. It's good. If you have a strong heart, says Lee, that's right. This is making your heart strong, without question. By the way, remember I was talking about yesterday how I haven't had the phone call yet with someone blowing out their account. I did have a phone call last night with a buddy of mine who is about to get margin called. So he wanted to know what he needed to sell in order to prevent that. So that happened. So now, so that we're all on the same page, though, this particular gentleman has no positions that I'm in. So he's just kind of winging it, doing his own thing. It's nothing that I advise him to be in, or advise is the wrong word. Educate him to visually view what he could buy. I think American Airlines is a really interesting spot down here. I know we're down a little bit post-market. I know a few of you trade American Airlines often, especially on the hourly chart. And I am going to keep a real close eye on it over the next day or two. So if we gap down and have a good day and a good powerhouse of a day on American Airlines, I think getting in above here makes tons of sense. I think it could pull back down to here potentially, and I might buy a smidge. I like American Airlines at this level. I feel it's pretty valued, a little bit undervalued right now, just as far as shares price. It could go lower, no question. Just know that I'm starting to watch it down here. Not nearly, though, as much as I'm watching my boy. Welcome to Southwest Airlines. Southwest Airlines. We'd love to have you. at the 200 simple on a weekly chart, also getting back below the same support that a lot of you bought it before. So about 7 or 8 of you rode this wave up on Southwest Airlines, not all the way, but you know, with shares or put sales, covered calls, nagging some gains. And we're back to the lows. We're back to the 200 simple on a weekly. And this is a spot to start watching Southwest bounce. Is it going to bounce? I mean, I don't know. I would love to use some protective puts. Something like this. So this will be a protective put. This will be a bullish position. I don't know if I'm just going to use an all-out stop or not, but weekly, again, just kind of hanging out that support. So, yeah, we're going to keep a close eye on Southwest over the next few days. It's back into that support again. How great would it be if it just trades down to this level again and bounces for another 17% gain? Actually, a little bit more than that, but back up to 60. This is the first time we've hit the 200 simple moving average on a monthly chart since 2012. 6 years. Wow. So Southwest. Some good stuff happening. Let me throw Southwest. I mean, really tomorrow and the next 2 to 3 days. Monday. Jaya says, how do you calculate your risk with protective puts? Very simple, very easy. So you really can buy your puts anywhere you want. It's entirely up to you. In this particular example, I just kind of put it down. So this would be a $3 risk, right? And then you just base it off of your R's. Okay, so whatever your R's are, this is a $3 stop. Technically, because that's where 47.32 is starting to be where your protective put will start helping you. And then if it gets down to the protective put, you start buying protective puts. And as you're buying your protective puts, those count against your cost basis. And your goal is to lower your cost basis with protective puts. So if you buy a protective put at that strike, you'd either buy a 48 or a 47. And it depends, November or December. So that's the time frame that you would buy, roughly, 48 or 47, November or December, one of those two. And then your goal at that point is to literally lose all of that money. Because you want Southwest to obviously bounce, go higher, and make more on the equity than you lose on the protective puts. So when I buy the protected puts, my goal is I'm always thinking, all right, this is where I'm capped. My risk is capped. I'm not going to be able to lose more than here if it just keeps tanking. But I want it to go up. And I use protective puts to prevent getting whipsawed out of a position that just trades on here and pops and runs. So if it's down here and it bounces around and then I lose all the money on the protective puts, I will factor that into my normal R's for the month. Because that's an active position. It depends on what account it is in, of course. You know, if it's in a long-term IRA or something, and you're not going to use that money for anything, that's going to be something that you're going to want to factor in to your longer-term account as far as R's are concerned. Because you want to know how much are you spending on a protective put, how much is it going to cost, and say, all right, if this goes to 0 and the stock stays flat, how many R's will that be lost? Jai says, if the stock keeps tanking, you'll lose $3 plus put premium. No, if the stock keeps tanking, the puts go up in value, and then the puts give you the opportunity to sell your shares at either 47 or 48 in this example, because that is the strike at which you're buying it. So that's really it. That's pretty much it. Yeah. So 47 or 48, you're buying it. If that's the strike that you're buying, you can sell your shares at that price, Or what I do is when I'm buying a company, if I'm buying protective puts, that's on a stock that I want to hold long term. I believe in the company or the product, or I like something about it. So at that point, what I will do is I will sell the protective puts at a gain, usually 30 to 50% ROI on the put purchase. And I'll put in parentheses, if that somewhere near a support or average or something. So if I know that there's something where I should be getting in and getting out of a position, like an obvious support level, then I'll sell there. Or just generally, I'll sell at 30 to 50% of the put purchase, that return. I'll sell it. I'll use 100 or 200 bucks. I'll buy 3-4 more shares, and then I'll look to do it again. And then that way you can build a pretty decent share position if the puts could keep going down, the stock bounces into a support, and then eventually recovers. Because again, if you're investing into a stock, a good company, eventually it's going to go a little bit higher. I mean, sure, Southwest could go all the way down to 35. And if it does, I'll be trading protective puts all the way down to 35. And hopefully at 35, I'll be able to, between now and then, maybe end up buying another 30, 40 more shares, or however many, depending on how big you have your position, and then just kind of let it ride. So there's a method to the madness, and there's never a perfect or exact way to do it. But I do plan on very shortly coming out with a program called Hedging with Options, just trying to figure out exactly how to formulate that. But yeah, I do have a video on protective puts as well, and they're cool. I love using them. They keep you in a good position, but you do have to have the capital to afford them, right? Obviously, that's also part of it. QD is down. Had a little bit of a gap up today, but QD just slowly trending lower, very lightly down, 447. So I mean, that thing could rally. I'm gonna put it on the list for this Friday. Keeping my eyes on some Chinese stocks that I just really do feel overvalued. The stock, unless they're cooking the books, the company is making money, and the chart is hilarious. So again, this is a profitable company, unless they are cooking the books, which is certainly possible. And I think we've only taken one trade on QD, and we lost on it. And so now I'm just looking at potentially trying to get in at a low price and catch a nice little quick flush higher. Next on the list is SAM, S-A-M. And this is the Boston Beer Company. Sam Adams gapping up on earnings to 285. This is a pretty decent gap. I like the level. I'll be watching it. This is a perfect gap for my buddy George. He has another short strangle on Boston Beer Company. Yeah, his is pretty far away. Let me ask him when that expires. Let's see. Let me hop over here. Come over here. Come over here. Let me just scroll up. I know we were talking about it. I have my exit order set on Netflix. Sam Strangle, I think it may pass me by. Oh, he has it open. Okay, he never filled on Sam. Got it. Never filled on Sam. All right, so that one's just kind of hanging out. It's a decent gap. I'm going to put on my list for tomorrow morning. So Friday morning, SAM, Boston Beer Company, just to watch it, see if it gaps above that level, see if it takes out some people. Probably won't day trade it. Just one to watch. CELG, CELG, down again. So I was looking at that last few days and was like, okay, folks, it just looks like CELG's and keep going lower. And the other reason we were watching it is because it was at the 100 simple on a monthly chart and never broke above that bullishly. So it could, on a monthly chart, close below here. And if it does that, I think that is not a good thing for CELG. So Thursday, the monthly month closes on Wednesday, right? Wednesday's the 31st of the month. So this upcoming Wednesday, October closes, and you're going to have all these monthly candles closing on a monthly chart. So just something to know. I love going through and looking at the monthly time frames and seeing what's going to happen. Okay. Let me put MELI on the list for tomorrow. All righty. So next on the list is Verizon and VZ. This is one I was looking at getting in bullish. And I do think it actually will pull down into that support and trap some folks. It looks like the whole tech stock's going to be, the whole tech market's going to be doing that, which I'm just really trying to figure out where I should buy it. Lyle, good job exiting some of your position on that one, buddy. I know you didn't. I know it was just a wild, like, it's just a crazy, crazy intense move. I think you missed your target by like 2 pennies, by the way. So sorry about that. That's there's no other explanation other than sorry. It's just brutal when that happens. Yeah, I just think it does appear that we're going to probably take a little bit of a dip into a potential support, maybe on Verizon. If you do get stopped out, don't be afraid to get into it again. My only question is, do I want to get into this long term now that I do own Verizon phone and I do like it? And so that way I could be a longer term shareholder, or do I just nibble at it? Yeah, I think we've come down. Let me put Verizon on the list for next Tuesday. I'm just going to give it some time. I don't think I want to do a short-term trade on Verizon. I think I want to do a long-term. That and T-Mobile. Both long-term are looking like they want to do something interesting. So this is T-Mobile, and T-Mobile on the verge of breaking out, and it's retesting. It was up today. Definite interesting pattern. So T-Mobile, I won't do both long-term. I would either do T-Mobile or Verizon, and since I own a Verizon plan, I'd probably go with Verizon. It's just really that simple. Okay. Shopify. So Julian, what did you end up doing with Shopify? And anyone else in the Shopify put sales? So Shopify was up 12% today. And with the market is gapping down just a little bit. So it's gapping down to 132.95, which is a little bit of a bearish gap. Again, we'll just have to see how the market plays out, what it ends up doing. It probably will come back. So Julian said he's still in a spread. I know that there's a lot of traders and some put sales on Shopify right now. I don't have one personally on SHOP. What I can say is I'm going to put this on the top because if I put a close down here, end of day bearish. If at any point in time we close below 127.82, just consider buying some protection. And here's why. The weekly chart to me looks a little double topish or something. We did close below a neckline, depending on how you draw it, and we are retesting it now, depending on how you draw it. There obviously is a little bit of tech weakness. I'm not saying it's going to go to zero by any stretch of the imagination. I like Shopify, big fan of the company long term. Just saying if we close below some of these levels again, similar to how we did over on this day, it'd probably just be, and you could put it down here, 126.55, just somewhere in that general area. You could at least have a put that you buy. Maybe buy a put just to protect. If you have long-term put sales out there, just make a little bit of money on the downside. I think that's it. I mean, is it going to bounce? I would love Shopify to gap down tomorrow and run higher. I think there's a good chance that's going to happen in the market tomorrow. As I mentioned, I think we're either going to have the most bullish day of the year or the most bearish day of the year tomorrow. That's both of those are entirely possible. And it's kind of funny because I will go back to the market for a moment. I told you guys I was going to be all over the place today. With the Qs gapping to 167.02, that would be a 2% gap down at open. Now, I mentioned just the other day, usually when you have a gap down that large, it doesn't last. So I could easily see just a flush down 4% in the first hour and a half. And then we rally hard, and then we close like this. I could see that. That makes sense. I mean, it's going to be a gap and go if we open below the low of this candle. You know, so people will be trapped. People will be excited. You know, you could get a nice sell off. It could be a 5% down day tomorrow. You know, it could also completely change by the open. So don't stress out about it. You know, don't lose sleep over it. I'm gonna have to take some melatonin tonight, most likely, but that's not shocking or new. What's that? I have a hard time sleeping because I'm so excited about life. I'm so excited about all the things we're going to do tomorrow. Here's 10-cent holdings, which is just getting just kerbolished, as Brad would say. It's down at 34.90. A little bit of a double bottom. It's trying to hang on by the skin of its teeth. But again, for me personally, this was a $500+ billion market cap company months ago. And now it's $387 billion market cap company. I did some numbers last night, and 10-cent plus Alibaba equals Amazon as far as market cap goes. And what's interesting about that is both 10-cent and Alibaba serve more people than Amazon as far as just pure how many people are out there. I'm not saying China's undervalued by any means. I'm just saying that this is definitely a massive pullback, and I'm going to hold through all of it. It goes down to 200. I'm going to buy a little bit more. Long term, again, I think China is growing. The GDP is growing. Tencent isn't even really affected by the tariffs. It doesn't even really ship anything. And the max pain, according to Ken Fisher from Fisher Investments, a deca-billion dollar hedge fund, the max pain is $600 billion. $600 billion. And if you're talking about the global domestic product between both the U.S. and China, with its shipping and its and the growth and the overall just how much else flows through the countries, you're looking at less than a 1.5% hit. So you're talking so tiny. So yeah, you're going to have some effect short term because people are flipping out about it. But I think just long term, there's a lot of screaming buying opportunities. I'm just going to hold. I'm just going to be patient. With Tencent, you can't hedge because it doesn't have options, so that sucks. So my other goal is any money that I make going bearish on BABA or IQ, or we're in something else bullish, but really just those two. Those two are the ones I've traded the most. If I'm making any money on those through a day trade or something like that, I'm going to take some of that cash, a little bit of it, funnel some of it aside, and look to buy TCEHY on a downturn on a little bit of a lower level. So the also thing is this is still a fib level. We could go larger, and we could do a level all the way back down to here, which says the 61% retracement is 31. So it could turn on a dime, but Tencent, Falco says it's going to be 5-cent holding soon. Oh, that's rich. That is funny. So yeah, we will see. We will see. Alibaba. speaking of, BABA. So BABA gapped up today, retesting, and it's gapping down again tomorrow morning. The low of today was 141.01, and we're gapping to 141 exactly. Again, totally able to change by market open, and I'm sure it will a little bit. I'm sure that there will be some change, obviously, between now and market open. But I just think that BABA's probably going to go down a little bit lower. And again, the weekly chart, we're just hanging out, resting. We have almost an inside week. And here's the hourly chart. So the hourly chart, we just bumped our head against the long-term moving average on an hourly. And yeah, you have a lot of gap ups, a lot of gap downs, a lot of fluctuations. And if we do gap down and we do run tomorrow on BABA, earnings are in November, and we'll just kind of give it some time just to see what happens around that particular time frame. So that's BABA. Here is FedEx, ticker symbol FDX. And FedEx is a little bit of a bearish trend right now, gapping down tomorrow as well. Tiny, but it is gapping, 211.41. I know Chief loves playing some FedEx ever so often. Here's the long-term moving average. We got to close below the 100 simple. We're also getting a close below this high wave candle potentially tomorrow. This will be 6 bearish candles in a row on FedEx. So we most likely will have a gnarly retest, but that retest will probably be shortable. We had the short-term retest right here, and next will be a long-term retest. Again, just to reiterate, tomorrow with the gap down tomorrow, if we hold that way, we could either have a very bullish day or a very bearish day. Back to the markets. If we open without going below the low on the Qs, so if we open, let's just say down 168.40 or something, we'll probably trade higher, have an inside day candle again on Friday with good volume, and then we most likely break down maybe Monday, Tuesday of next week. I don't know. If we do have an inside day candle on Friday, if we get an inside day candle on Friday, consider a strangle. If you're playing options, consider a strangle. So you're buying both calls and puts out of the money if we get an inside day on Friday, because most likely you're going to get a gap in one direction or another. And if you can read that gap sentiment appropriately and hold on to the position, you can make a little bit of gains potentially, or at least hedge something. Here's text. No, sorry, it's supposed to be Yext. YEXT. And Yext, a little bit of a bullish bounce tomorrow. It might gap down. It did have a bullish higher high and higher low candle, which looks super different than the broader market. So if we do open below the low of this candle, which I don't think we will, again, tons of time, pretty much no volume whatsoever. So I doubt we actually gap down there on the X, but I'll watch it just in case. Because if we do, that's going to flush. Here's the weekly charts, and very interesting pullback on YEXT. Wow. What a cool spot. So you got like a very nice S-curve, good retest, nice bounce, back to that low. YEXT. Here's the daily and the daily time frame. I don't really see much. Brad says, Matt DeLong had a post in Slack about how we're getting declining prices on increasing volume. What do you make of this? Same thing I've been saying, Brad, really for the last last 24 hours. I think we're going to go lower. Simple as that, man. I think we've closed below a massively strong support on the market, and we are going We are making lower lows and lower highs with increasing volume, and this gap down post-market is just another semblance of that we're going to slowly keep going lower down to about 258 on the SPY, and then from there, we probably bounce. Cannot ignore the close from yesterday. Just can't do it. It is too strong. So yeah, man, that's my thoughts. Honestly, I think we just keep slowly peeling down. For now. And I forget, again, another Ken Fisher statement. I mean, he has a few $100 billion under management more than I do. But Ken Fisher mentioned that 76% of the time, let me make sure I don't get this incorrect. I'm probably going to say something incorrect, but 76% of the time, with the market going down into October, with the second term of a president and midterms coming up, the market is higher 76% of the time. Something to the extent of where we are now in this cycle of things has happened before. Santosh says it's 87%. Oh, was it 87%? Okay. It's a large number, meaning we could just crush lower a little bit, go down to 257, and then bounce all of November, all of December, and end higher on the year. Still very possible. Don't discount it. This could be a gnarly whipsaw, and everyone gets smoked. Well, not everyone, just a lot of traders, a lot of other traders. We trade down to 250-something and then just pop hard December, November, December, and just run right back up and make a new all-time high. I mean, I do still think we make a new all-time high, but the second term of the presidency, not a second term, like what's it called when they're almost halfway through? Midterm, but the term of the president when he's like halfway through his presidency. Anyway, I'll look up the quote. I'll post it later. Where am I? Intel. Santosh knows what I'm talking about. If you can find that link, Santosh, and post it for me, I'd appreciate it. I'll find it somewhere. So Intel was up today, and it's actually gapping up a little bit post-market. Here's the weekly, and it did trade down to the 100 simple on a weekly. That was at 42.69, and that was almost the exact low of yesterday. The low of yesterday was 42.36. And you're bouncing off a little bit of a fib. Not that that really matters. So Intel is out of support. It's going to have a really key level, and I don't think it turns into a head and shoulders pattern, although that is very plausible. In order to be a confirmed, quote-unquote, confirmed head and shoulders pattern, it's got the close of the neckline, or I think a little bit of a higher high, get some rollovers. Certainly could happen. I'm just a perma bull, and I just like to expect the best in the stock. And while it can have a head and shoulders, even if it does, it probably sells off to 30 or something and starts rallying again. I know it's hard to be buying some stuff right now. It just depends on what it is that you're trying to buy. Some charts still look a lot better than others, like Square. I still like the chart on Square. Still looks pretty. So anyway, that's Intel. A lot of chip makers took it a little bit on the chin today, and well, yesterday, AMD got absolutely destroyed. So that's Intel. I mean, we're gapping up a little bit post-market. I'm going to put it on the list for tomorrow because guess what I'm going to be looking for tomorrow, folks? Looking for strength. STRENGTH. For my day trades, I'm going to look for strength. Look for bull moves or superior weaker moves. Meaning you had a lot more people trapped than just what the general market is doing. The Googles and the Amazons, you have like 4 or 5 people trapped. Something different than the broader markets. All right, so speaking of AMD, gotta give a shout out to my buddy Ricky over there in Australia, repping for my girl Jill. He went to bed at 4 a.m. today. And Ricky played AMD out the gate bullish. I missed it by a few pennies. I wanted to go long at 1702, and I missed that opportunity. Brad has a put sale at 1850. That's going to get really close. Brian Montgomery is a little bit underwater on AMD with his put sale on AMD, and we'll see. Santosh says, how'd you recognize that AMD is going to just fade before the market opened? So really because of the candle. So we talked about that a little bit yesterday, but it's just the candles. It's all candles, right? I mean, you went from 32. So we're going from 32 to 18. That's a 50% sell-off in a month. So that means that some people are going to both A, buy to cover their short position, and B, look for buying opportunities. The second thing I noticed, and I talked about this the other day, and I probably should talk about this. In fact, I think I have this on my notes. Give me a second. Shaved bottom and top candles. Their sentiment. Gapping, no good. We'll talk about that. We're going to make another video on that very soon. AMD had a shaved bottom candle. And I was talking about that not too long ago. Here's another shaved bottom candle. When you get a shaved bottom candle that gaps down, very high degree that it's going to fade a little bit at open. Similar to this candle right here and similar to this candle. Because when you have a shaved bottom candle, it usually is going to gap up the next day like this, or it will gap down and it will fade immediately. Because everyone who is already in is in short because of the candle low and the close is the exact same, right? Those candles mean that everyone possible is just shorting. So it ends on a day where literally couldn't be more bearish at the close of the day because there's no wick. There was no buying at the last 10 minutes of the day. Everyone's selling. So when you see a candle like that and it gaps down, like you just know it's going to fade. Or at least I thought so. And then that's what we talked about yesterday. Now, if you go into a 3-minute chart, the 3-minute chart was kind of visually appealing because when you're looking at it post-market, here's a 3-minute, and what you get on a 3-minute time frame before the market even opens is a higher low. So you're getting lows, higher lows, higher lows, higher lows. You're already getting higher lows in the market. So once that comes in, then you just look for people to get trapped, which was, this candle right there, that wick. Everyone's trapped, and then you just buy it with a breakout or get in at open if you want instead of stop below the 200. Or get in at open instead of stop way down here at 17. Even if you did that, even if you bought at open with a stop at 17, which was below the pre-market low, that's only $1 of risk. And if you did that with 1,000 shares, 1,000, you can make $2,000 today. So yeah, it's $1,000 risk. So if your R is that big, it doesn't really have to be. Santosh says, does this concept work on daily, hourly, or 5-minute charts? Mostly daily. Because you don't really get a lot of intraday gaps. I haven't studied shaved bottoms and shaved top candles on hourly charts. On 5-minute charts, you don't really get much gaps. So yeah, mostly just the daily. Good question though. Here's Kroger. My boy Kyle Williams want to look at Kroger, and Kroger on a weekly chart trading sideways. But it's trying to bounce off the 100 simple moving average, and Kroger making new highs. There you go. I realize that Kroger owns Fred Meyer, which I believe is in Boise, Idaho, and a few other places, and that is a huge store. Kroger, massive grocer, higher lows on a weekly at the 100 simple. Looks to me like a longer term play. So if you're playing it, you're probably buying off the 200 and you're most likely accumulating it to be in longer term. Otherwise, I don't see much right now on it. PTOTF, I've never heard of. Patriot One Technologies. This looks cool. No clue what they do, but they are crushing. Look at this volume. Thanks, Kyle. Patriot One, OTC, over the counter. Retest gap, high wave candle, a little bit of a cheaper stock, but it looks like it's working on going higher. I'm going to put that one on my list for tomorrow. I'd love something just inconspicuously, ostentatiously bullish to trade. Friday, PTOTF. Patriot One Technologies. Feel free to look into it. Decent retest gap for sure. So I want a little bit more of a retest than this, but if we can get 1 or 2 more days and again, hourly chart, that could just be a stock that no one's really talking about or looking at that we might be able to hop on and get an R or 2. That'd be nice right now because this market is wild. LULU. I'm watching LULU bearish. And if you're watching it bullish, that's also fine. Just bracket trade it, and let's do something like this. So there's your end of day bullish, and there's your end of day bearish. I'll put this on the top. And I'm looking at this as, let's see what it does. I'm going to put LULU on the list. I think we can hold off until a little bit tomorrow and Monday. We'll probably check it out. But yeah, I'm going to watch LULU for bearish. And obviously it could be bullish as well. Either one. It's really right at the 100 simple, pulled back nicely. The trend, though, is getting kind of funny. It's a funny looking trend. You have 3 giant bearish candles in a row, high wave bullish candle on the weekly. So if that breaks down, I'm going to hop in bearish. DE, the only reason I'm pulling up DE is because DE trade down to the 100 simple on a weekly chart. So long-term traders, you could do some stuff here on DE. And this could also be a spot for day traders to look to pick some up. If we get a gap up or gap down or something, we can make it happen. Julian asks, why are you looking for strength tomorrow? So looking for strength meaning gap ups because they're doing something different than the market. If everyone's expecting the market to gap down and you have one giant stock that's gapping up, what do you think? A lot of money is going to fly to those stocks that are gapping up. A lot of people are going to try to take breakouts, bullish moves, because of the market being down also, 1.5% at open. If the market does fade and go higher, then it could bring that stock up as well. So DE, Deere and Company, could also be one I'm going to watch tomorrow morning. It's not gapping down, and just in case, if you do get a gap up on DE or a breakout or something, that could be nice. Tim says, you were speechless and you talked for a solid hour. I know, man. Sorry. Activision, ATVI. I'm going to hold off on this one. Here's a weekly chart, and it's gapping down 68.90. I still think Activision goes a little bit lower. Really good support right here in Activision at about 68. Here's the daily, and yeah, it's gapping down. So again, we could just gap down tomorrow and open higher and trade higher, and all is fine. But if we don't, I'm going to put Activision on my list. ATVI. I'd love if this candle pattern just holds until market open, and we just break that support and trade down to that. That would be nice. Day traders, we're going to have a blast tomorrow. Be ready. It's going to be killer. Great to have Blake Anderson on the mic. Estee Lauder, ticker symbol EL. So Sylvan's looking at Estee Lauder because he likes the company, likes the makeup, likes wearing it, feeling like an excellent human. Something like this coming into play, maybe, possibly, head and shoulders pattern, I don't know. Few different places to have the neckline, few different ways to draw it. Is it going to go to zero? Most likely not, but earnings is around the corner. This one could be a fun one to have a strangle on. if you like playing strangles. A gap down would be gnarly, and a gap up, I'd probably fade it. You know, so if it gapped up big on earnings, I'd probably sell my calls, hold on to my puts, and see if it fills the gap. And if it gaps down, I would just leave the calls and let the puts run. Other than that, I don't have anything on Estee Lauder. 2 left, Walmart, WMT. I still like Walmart bullish. It's doing something different than the market. Long term, that is. My analysis back over here was if you're in, just keep holding. I don't know if, Angela, if you made your gains off of Walmart calls or not, but if you did, congrats. We're pulling back a little bit again. We really could pull back and then bounce, but right now, of the retails, Walmart does look strong. It is coming into the end of the year. I've heard that people like shopping at Walmart. Angela says, sure did. Nice. Great job, Angela. So I like Walmart. I like the company. I like the spot. And if you're playing it, I just think it's a long-term buy right now. Obviously, you could do shorter-term buys like Angela did. She got in and got out with some quick call options. This is probably one of the more bullish of the blue chips out there. And if we gap down a little bit tomorrow, maybe find a spot to buy and see what Walmart does. And then here's last on the list is Paycom Software. Vito asking what I think about Paycom. Paycom looks weak. Too high, too fast. I think Paycom could trade down easily to 114. Give that one a little bit more time. Looks like the broader markets and earnings is around the corner. So let's put on Paycom on the list for Tech Giant Tuesday. Sorry to go a little bit long, but I still have yet to have anyone complain about that. In fact, I've never really had a lot of complaints at all from real life traders because you guys are amazing people. And I just want to commend you all for making other traders' lives better. Even if you don't know it, your jokes, your kind spirit, a kind word, a meme, a funny post, it's more beneficial than you think. I appreciate you all enriching lives. A lot of traders are just enjoying these moves. Let's continue thinking ahead, being nimble, taking small risks, taking a jab when you see the time, and losing less than you make. Tomorrow is Finance Friday. Anything else you guys want to see? My girl Francois says, thank you for everything, Jeremy. My pleasure. Thank you for being here. I appreciate it. And it's thank you for chatting with Ashley in an email. You're amazing. December says, thank you. Paul says, awesome. Hey, Paul, you're welcome. My girl Kathy says, thanks. Lots of positive people. That's right. The two sisters, Lee and both Lee and Kathy in the building. I want to say to the sisters who are out there, you guys are awesome. All right, team. I'll see you tomorrow. Till then, love, life, live, life, trade. Bye.